Now we got to talk catalysts. We've got some big catalysts coming up this week where we've got earnings catalysts, we've got Fed catalysts, we've got inflation catalysts, we've got a lot of catalysts. And what I do not encourage you to do is take a shot every time I say the word catalyst in this video. Even though that would be really entertaining, it probably wouldn't be healthy. And if you want to see the shadow of my PP, make sure to check out my Instagram story from yesterday morning at Meet Kevin. You can see what the shadow of my PP looks like. But first, we have to talk about catalysts. So, first, we have to understand that the market this year so far has been rallying. We know that. That's pretty obvious. And I want you to see exactly which sectors it's been rallying in, because these sectors have some really big earnings coming up. Take a look on screen now. You could see the catalysts here, or those that have rallied the most for the year, rather, the sectors that have rallied the most this year. Consumer discretionary up 16.3%, tech up 12.3%, communication services up 13.1%, with negative returns on energy, utilities, healthcare, consumer staples. And what's fascinating is we've got some big catalysts. That's a key word to take a shot, right? For this week, starting with two big ones on Tuesday. Remember, Monday the market is closed for President's Day. Tuesday we have Walmart and Home Depot. Those are going to be big. And the reason they're going to be big is because you end up having a big inside scoop into what's going on with two types of consumers. Actually, really three types of consumers. You have Home Depot, which will let us know how the homeowner spending is transforming. Now, remember, what's crazy about this is the people who spend money at Home Depot are 90% homeowners. 90% of people spending money at Home Depot and those are homeowners doing homeowner projects. And when they stop spending money, it's because they're starting to feel the crimp on homeowner expenses. See, when the market is going up for real estate, people think that spending money on their homes is an investment. That's stupid. That's how to go bankrupt, okay? If you buy a home and you keep doing projects and you keep renovating, you're doing it because you want it and you want to feel good about yourself. It's not an investment. It rarely is an investment. Rarely. And don't think you're part of the rare. You're probably not. If you're watching this and you're like, man, I just did wainscoting everywhere. The value of my house is way higher now. Wrong. Anyway, so we're going to learn about the sentiment of households, generally wealthier households. People who own real estate are generally wealthier than tenants to the tune of 10 to 20x. Walmart will let us know about two types of consumers. One, your lower to middle end consumer who always shops at Walmart, but also your downgrade customer. It sounds offensive, but I mean, it's true. The wealthier customer who's now going from more expensive stores like maybe a Whole Foods, and they're actually going shopping at Walmart, leading companies like Whole Foods to actually start reducing prices for their foods because they're realizing they have to compete with Walmart because they're losing their customer base to Walmart. So getting reports from Walmart and Home Depot, really important for understanding what's going on with discretionaries, but also understanding what's going on with staples. Really big catalyst there for Tuesday morning. And they could also give us a heads up into an inflationary impetus of the market. What are those earnings calls going to tell us about pricing? Very, very important. It's some of the most important leading data you could look at. People hear me say earnings as leading catalysts, and they're like, nah, man, I like lagging stuff like unemployment reports. Man. Walmart and Home Depot, it's where it's at. So pay attention to those Tuesday. Tuesday after the bell. Actually, you're also, before the bell, you're going to get some Philly Fed surveys. Fine, we'll cover that data. Tuesday after the bell, you're going to get Coinbase, Palo Alto Networks, Toll Brothers, Caesars, and ZipRecruiter. It should be pretty obvious why these are important. Obviously, with Bitcoin going up, maybe you would expect better earnings for Coinbase, although you should always expect the unexpected when it comes to playing earnings. This is why sometimes playing earnings is actually pretty difficult. Palo Alto Networks, look, if Fortinet and Cloudflare are any guide, they're going to kill it, but then again, maybe that's expected. Toll Brothers, this is your wealthier home builder. How are they doing? We'll find out. Caesars Entertainment, what can we learn about maybe international casinos like Macau, but also Las Vegas? Zipper, which we expect a boom in really the casinos. ZipRecruiter, how are those leading indicators for job openings and how do they compare to the JOLTS report? Indeed.com suggests that job openings are actually flat. That's good. We want job openings flat because we don't want a wage price spiral. Just like what we'll learn on Wednesday morning before the bell when we get data from Fiverr. That'll help us know a little bit about sort of that contract worker. Apple just apparently canned a bunch of contractors, and people are a little bit pissed who are contractors because they're like, Apple told us we were safe. Apple was bragging about being the company that didn't overhire, and so they didn't have to lay off. And they're not laying off. They're just firing contractors, which technically isn't a layoff. When you're a contractor, when work slows down, you get fired. That's called being a contractor. You don't get the phone call anymore. Anyway, Overstock, learn maybe a little bit about e-commerce. Wingstop, chicken inflation. Look, we already got Tyson Food. We already know that there seems to be somehow all of a sudden less demand and less pricing power for chicken than there previously was. So we'll see. Wednesday, after the bell, these are some big ones. Nvidia. Whew. What's going on in that chip sector? We know PC demand has been crap, but are we actually starting to see some server demand pick up again? Based on what you're seeing at some of the software companies, maybe you could actually expect to see some more server demand. Teladoc. I hate that company, but we'll see what happens. In case you're wondering why, you could just type into YouTube, meet Kevin Teladoc. I think it's very assembly line, lack of personality or lack of personal relationship service. It's very convenient for just bull crap like, dude, I got an ear infection, just prescribe me some antibiotics, damn it, right? But the biggest thing that drives me nuts is how they have in the past and still do propped up their balance sheet with a nonsensical, inflated amount of goodwill. Anyway, again, you could search YouTube for that. So who knows? Maybe they'll do great. You could just inverse Kevin on that one. But anyway, Etsy, Lucid, Dutch Bros, Matterport, Lemonade. Now I'm actually excited about Matterport because Matterport has been growing like crazy. Their user base, because they released this new camera or module attachment for iPhones or smartphones that lets you basically use the LiDAR sensor on your phone to do Matterport scans. Now the device is not good. I did not like it. Matterport actually gave it to me for free, and I emailed them and I said, I am sorry. I cannot pitch this, the phone version. I love the big boy. Okay, I like it big. I like the big black one. That's the big black camera device. That's the all-in-one, and it spins around. It's like really strong and powerful. Amazing. Really good. And I'd love to try out their new Matterport 3. I think it's great. Well, the problem is you're in a seasonal cycle or cyclical cycle. Well, you're in the cyclical environment where real estate is slowing down. The amount of money agents are making is slowing down. And that means the investment agents are going to put out, I think, is lower for listings. And so I think you're going to see a drop-off in Matterport signups. But again, maybe inverse trade that one because, it could be wrong. The leading indicators aren't good for Matterport. But then again, the leading indicators were terrible for Airbnb and they smashed it out of the park. Oh well. Dutch Bros, Lemonade. Lemonade will be interesting because the financials of Lemonade are not great. But their stock has been down so much. It makes you wonder if they're maybe a little bit closer to the path to profitability. I don't think so, but we'll see. We do also, in the middle of the day, get the Federal Reserve minutes. I don't know how much those are actually going to matter this week, but everybody will hold their breath for a hot moment on those minutes. Thursday, before the bell, you've got Alibaba, Wayfair. You'll get some GDP annualized numbers. Thursday after the bell, you'll get Block, Square. You'll get Intuit, Beyond Meat, Carvana, Autodesk, Booking Holdings, MP Materials, and Opendoor. Boy, Opendoor sucks. Every single Opendoor listing I've been going through has been something they substantially overpaid for. And honestly, I think they just don't care about their listings. I went through a listing, it literally had a dead mouse. And, the smoke detectors are all yoinked off on all of them. It's like, these are some of the most trashy properties you could go through. I pity the fools who buy Opendoor listings because they're so poorly put together. They're so disgusting. Every one that I've been through, I have not seen a good Opendoor listing. And hopefully the people at Opendoor wake up and get off their ass and do something. Because if they're wondering why their inventory isn't selling, it's because they suck. They're literally terrible at managing real estate. I really feel like the executives don't actually go look at their real estate. They don't even know what they're doing with real estate. It's a company that, quite frankly, I cannot wait to go bankrupt. And that's, I don't have any shorts against Open Door. You know, I don't want people who work at Open Door to lose their jobs. But let's just put it this way. People at Open Door, they should like open their eyes probably a little bit and go, yeah, this company is going downhill. So just be careful. Like, I don't want you to be blindsided when you lose your job, because they've already done 2 rounds of 25% layoffs or whatever. But it's just go through some of the Open Door listings and tell me your opinion. And I don't know, my experience has been terrible. That's just my opinion. It doesn't mean the whole company is like that, but I don't know. Anyway, so they report Thursday. Since I'm so bearish, they'll probably go to the moon, but whatever. If they're smart, if their stock rallies, they will dump on that rally and raise equity because they need it to survive. Carvana is another one that needs it to survive. They should dump on every rally that happens. Autodesk will be really interesting because I think it'll give us a little bit of insight into that recurring revenue model as well from architects. You know, are we seeing sort of a slowdown there for building and construction? Booking Holdings, Travel, you know, Beyond, FAD, Intuit, you know, leading into tax season, Square, consumer balances. You could get a little bit of insight from Square on consumers from existing bank balances. Friday, you actually get a big inflation catalyst. Friday, you get PCE, personal consumption expenditures, expecting the deflator number to come in at 0.5% month over month, core 0.4%, year over year 5%. Should be pretty similar to to CPI. In other words, wouldn't be surprised to see it come in hot, but who knows? Slightly different survey, and it is the Fed's preferred inflation gauge. We get University of Michigan sentiment. We get Cinemark reporting, which is a nice leading tell for AMC coming up Feb 28th. New home sales expected to be 620,000. New home sales growth expected to be 0.7% month over month on Friday. So that, my friends, is a set of catalysts coming up for the week ahead.